next speaker is Mr. Enrique Fausto. Enrique is the Chief Financial Architect at IFE Management, where they help millennials navigate through their different life stages through financial planning and wealth advisory services. IFE Management, or Investing for Everyone. In addition to being a CFA charter holder, Enrique is also a certified investment solicitor, a certified securities representative, and a certified UITF salesperson. Enrique has been a resource speaker on money for the youth since 2009 and has been an investor since birth. Please give a warm welcome to Mr. Enrique Fausto.
Thank you. Hello, can everyone hear me? Is everyone good? So, okay, it's the last talk for the entire session. I know you guys have been here since like what, 8, 9 a.m. So if I could just ask, as we start off, may I ask everyone to please stand up? Now let's stretch a little bit, because I know it was quite a lot. Ang dami nangyari today. And for me to essentially introduce what we're going to be talking about, I'm just here to answer one question. You guys see it here? I want to help answer the question, how do I manage my money to design the life that I want? No? So while you guys are standing up, I want to start off my talk today with this one question. Why is money important to you? So if I could just ask anyone who wants to volunteer to answer this. Why is money important to you? Here from our live audience, is anyone alive? Meron ba? Oh, game ba tayo, Aljon? Sige, why is money important to you?
It gives me to do things I want.
Makes me do the things that I want. Sige, one more, maybe one more.
Money is power.
Money is power. I think there's one last. Sige. Oh, one last. Why is money important to you?
It gives me options.
Perfect. Okay, thank you everyone. Can you all sit down? Thank you. Just wanted to make sure everyone was awake, and I wanted to know why you guys are here on a Saturday, diba? So it gives you options. There's power in it, no? And that's what I want to help you guys be able to do today. Have the control, have the power when it comes to your money. So I'm going to start from the top, no? Just so you know before I think the best way to learn something is to hear another person's story. So allow me to share my story. That's me over there. So I'm actually the middleborn. I'm actually the middleborn of 3 brothers. So that's how we looked like before. This is how we look like today. I'm very close with my family. My father's actually over there, aka my idol. He's the one who's now the president of the COL Investment Management Company, or CMI. He used to be the former chief investment officer at BDO, managing money for a lot of people. My mom also is from a finance background. She used to be an investment banker. Now she's more known as FQ Mom, a term she coined. And now she actually writes books. She has a column, and she even has a class at San Ateneo on the same topic. For me, I went into finance, but my brothers chose different paths. My older brother, Martin, now leads a leadership consultancy firm called Brandem, and he works as a people lead at the fintech startup Zendit. And for the younger ones here, which I think is most people here, no? My younger brother Anton is more known as a former mixed VJ, and now he hosts his own podcast. So a different field altogether, and he also helps me out with his TikTok videos and that kind of stuff. No? So who is this guy you're talking to? So my name's Enrique. I studied in Xavier School. So it's a Filipino-Chinese school. And then I took up BS Management Engineering in Ateneo because I wanted to torture myself with math. And given that inkling, okay, let's try out this finance thing. I actually worked in Union Bank as a management trainee, figured out the different areas of the bank, and then ended up as a fixed income or a bond trader. After which my first love, which was my internship, called, and Regis, or Deutsche Regis then, I was a stockbroker. I got a position there as an equity research analyst. So if you guys watch Wolf of Wall Street, something like that, but all above board, everything there was legal. And while I was there, I was a scholar, thanks to Regis, thanks to Union Bank. I got my CFA charter, which helped me really dig into this investments world. And more recently, I now run a financial planning wealth advisory firm called IFE, helping essentially clients figure out this money stuff. So that's essentially me and my story. And right now, what I do with clients is I help them with this very simple thing, which is how do I design my life? You guys learned a lot today. There's a lot of specific strategies, products, topics, and I'm here to simplify it all with a very three-step simple process of how to do this, designing your life when it comes to money. And it's this simple. First, you have to do the design would be a diagnostic. Think of it like an executive checkup, but for your financial health. No? Second, you want to look at what are your goals. No? Not what your parents say your goals should be, not what society or IG says. What are your goals? What do you really want? And what part of that can money help you achieve? And the last part, I think is the most important part, is having a life plan. No? Being able to understand how everything ties in together, no? For you to be able to achieve your goals with the maximum probability of success. So to kick things off, what do I mean by doing a diagnostic? This is a question I love asking our clients whenever we go through this process. No? And this is one question I think you guys can answer right now. You have your piece of paper. I want you to write down, what is your current relationship status with money? Diba? Imagine mo, lover mo siya, pera to, pera. Okay, so is it getting to know? No. Is it MU? Uso ba yung term na yun? Is it already committed? Is it toxic? So I want you to get your piece of paper or just your notes app, write it down. Saan na? Saan na ngayon? So can I get the raise of hands? Who here is getting to know phase? Getting to know phase? Okay, I see some hands here. Okay, okay. Meron ba ditong committed na? Like, long-term relationship already, probably married. Can I have a raise of hands? Meron ba tayo dito? Okay, wala pa masyadong hands. Last bit. Anyone here with a toxic relationship? Or parang one night stand, tas nawawala na lang? Okay, I see some honest people there. Thank you, thank you. That's where we're gonna start, right? You start off with where are you today? And whatever your relationship status, it's okay. You know, it's usually a product of all the things you experienced in the past, maybe how your parents raised you, maybe how your friends kind of influenced you. That's your starting point, and that's okay. But today, the more important question to ask yourself is, how do you want this relationship to improve? Medyo toxic pa ngayon, no? So how do you want that to improve? Once you're clear on where you want it to go, then it's easier to figure out what you're supposed to do. And my, I guess, number one action point is to actually dig into the numbers. Schedule what we call a money date with yourself. If you're married, include your wife or your husband in this money date. So you have your piece of paper, write down now, what's the date and time you're gonna have this money date to dig into the numbers. And when I say dig into the numbers, your main goal, no, is to create what we call your personal financial statements. What do I mean by this? We learned about understanding stocks, reading company financials, about earnings, etc. But if you think about it, understanding yourself is the most important thing, because you're the most important stock you will ever invest in. So if you're gonna spend an hour or so understanding these different companies, teka lang, do you understand yourself? Let's start off there. And when you're on this money date, here are the quick tips, things that you can start off with. Create your own income and cash flow statements, very simple. Looking at all of the sources of income, whether it's your salary, business dividends, rental income, etc. Then you write down all of the expenses, everything, whether monthly or every year. Yung mga nakakalimutan natin, mga taxes, or may insurance, etc. Put it all in the expenses portion. And then you'll see there at the bottom is your savings. Put it all in like a nice Excel sheet or Google sheet. Any is fine. So that gives you a sense of the past. Now what I want you to focus on after looking at it is, how do you flip that? This is called paying yourself first. You may have heard it before. How do you get to a point where your income, you can remove already from the get-go 20 to 50% and have the rest as expenses? I'm borrowing a term here from Ramit Sethi. He actually has a Netflix show, I Will Teach You to Be Rich. And I like the term he used there, have a conscious spending plan. What does that mean? Before, you saw in your past, I used to spend 10, 20K on eating out. Based on your conscious spending plan, based on the relationship that you want for the future with your money wife, if you want to call it that, what should it be? Okay, instead of 10K, baka mga 8K or 7K a month. So be intentional, put it all down. And make sure that you're able to target at least 20% savings. No? And that's something you want to gradually bring up to 50. I'll share with you the math later why, but let's start off with that. So you have your income, saving, and cash flow. Okay, that's part one of the date. Part two of the date is making your own balance sheet. Very simple. Looking at everything that you own, minus everything that you owe, all the utang, or they call liabilities. Okay, I'll move. Make a picture pala. Sige. And then last would be your equity. Total net worth, total net asset value. All those three words mean the same thing. But the important one is the last one. Your net asset value is your true measure of wealth. If someone comes to me and says, I have $1 million in the bank, but how much utang do they have? 1 million. Okay, you're not exactly a rich guy, diba? So just to give you a sample of how that's gonna look like, same thing, just a simple Excel file, just put there savings account, checking account, investment account, say call account, real estate. On the right side, you'll see your liabilities, personal loans, mortgages, or maybe auto loans. No? Put it all there, and then you get your equity or your net asset value. Right? That's simple. That's your first date. You're good to go. No? And I know it might be awkward. I actually experience a lot of people, a lot of clients who don't want to face the music. I don't want to see it all. But I have to give it to you. It's going to be awkward at first, but here's a quick tip. Do you remember the first time you tried brushing your teeth? That's me over there with my older brother. You can see the toothpaste on my chin. I obviously was not good at doing it. It's very awkward. Right? This first money date is gonna be awkward, and that's okay. As long as you keep doing it, you keep brushing your teeth, you keep setting these money dates, typically quarterly or twice a year is okay. Then you're gonna get the hang of it, and you're not gonna be thinking about it now. It's just gonna be automatic. So if you still haven't yet, ang kulit, no? Schedule the date and time today. Write it down or put it in your calendar. When are you having this money date? Is it later, 7 p.m.? Is it tomorrow after lunch, mga 2 p.m.? That's up to you. Just write it there. So that's the first. Pretty simple, right, so far. Second is, let's figure out what are your goals. They mentioned it earlier, but let's dig a little bit deeper. How do I even find out what I really want? So here's a little activity that you can do, and we can do a little bit of it, like a mini version of it, right here, right now. I want you all to close your eyes, close your eyes, and imagine your dream life. I can see you if you're not closing your eyes. So close your eyes. And I want you to imagine, what does that look like, the dream life, the dream retirement? What does it sound like? What does it feel like? Do you feel the wind? Do you hear music? Do you hear nature? What does it smell like? Lahat na, no? That's an image you want to keep, you want to cherish. And then you open your eyes now. I would suggest afterwards, you can even make a nice drawing of that image. The clearer you are with your dream life, the easier it will be to do the day-to-day saving, investing, analyzing all these things. No? So be clear, what is your dream life? But for me personally, you know what helped me? It's the opposite. Which is, what is your worst nightmare? What is your nightmare retirement? For me, it's asking my dad for money when I'm old. That was a nightmare. But, I don't know, lucky, unlucky, back in 2019, I had the flash of this nightmare when this happened. I'm gonna play a video. Let's see if you guys can hear it. Okay. Wala atang audio, no? Okay. I'll just narrate it na lang. You guys see this? This is in April 2019. It was a 6.1 magnitude earthquake that hit Metro Manila. Right? So pretty crazy time. Where was I? I was in Deutsche Regis. This is in Ayala Triangle, Tower 1. This is my building. We were up here, all the way there on the 23rd floor. So when you're that high up, Can you imagine how that was like? Everything was shaking. I could literally feel the whole building sway, and we were swaying with them. Paper started to fall down, the dispenser was going like, the water dispenser going like that. And I can't forget this, no. Our team secretary, who literally sits right in front of me lang, no, she was totally freaking out. She shouted out at the top of her lungs, "Magdasal na kayo!" Ganon. As in, like, it felt like a movie. So for me, instant reaction, instant thought that I had in my head, shucks, mamatay na ba ako analyst? I mean, I'm not kidding. This is literally what I felt. Because at that moment, I don't know if you guys have experienced like a near-death experience, but it's crazy. Like, I really felt the fear go up here. It grabbed me by the chest, and then it went up to my neck na nakakasakal. I was like, parang hirap huminga, just for a few seconds. Shortly after, got to calm down. Okay, let's go down the stairs, no? Kasi bawal mag-elevator, no? And when I was walking down those stairs, it was a daming tao, very tight, narrow stairwell, a lot of people going down. I can't forget this. This is what I was thinking of. If the earthquake was just a bit stronger, or if this building was just a bit weaker, that could have been it. And for me, the nightmare was, parang sayang. You know that feeling when you remember how blessed you are with your family, your friends, your work, life's pretty good. And then at that point, I felt like it was still, I guess I felt I was very self-serving. I was doing my life for me, just for me. Pretty good life, no, but it's all just for me. And that's when I felt, shucks, I wasn't able to help people that much. Or I wasn't able to like leave an impact, change the world, that kind of stuff. And for me, that was the nightmare. Sayang. So having that experience really got me to ask the tough questions. Now, what do I really want with my life? Now, I hope none of you ever experienced something like an earthquake experience, but I hope you can use today, this Saturday, as your earthquake moment. It's what, June 10, 2023? Ask yourself, what do you really want in life? And in all honesty, thinking about your mortality, the fact that the days are numbered really helps clarify that. No? And for me, these were the things I thought of. I knew I always wanted to launch my own business that helps people more directly. I mean, my job really helped people-ish, because it's more institutional. But I want to help people more directly and really see the change in front of me. I wanted to propose, we were talking about it a while ago with Zane. I wanted to propose and marry my girlfriend then. And I wanted to make sure that while I was doing those things, I was also preparing for the future, preparing for retirement. So then it became very clear. And the way I would define retirement is making work optional. I could still do work. I actually think people should still work. My dad's still working, but that's just for fun for him now. Making work optional, that's what I wanted to get at. And once you're clear, no, this is your second money date. No? Hopefully it's not in an earthquake. Your second money date, ask yourself, what do you really want? Have those goals out, and then quantify them. So here's how I did mine, and hopefully can help you guys with your own quantification also. So for the business, I wanted a service-based business, so there's no capital needed, really. I just needed 6 months of my expenses, just so I won't go hungry while I'm figuring out how this business thing works. So at that time, I moved out. I stopped renting at the condo I used to be. I went back to my parents' house, because it's cheaper, just so I could have, okay, 50K a month, monthly expenses, times 6 months, okay, mga 300K, I just need that just there, emergency fund, got it. And mind you, I took a year from that earthquake to actually quitting my job. It was about a year. And at the same time, I was preparing for this, my ring fund, my wedding fund, for all the guys, or I don't know, depends on who pays for it, diba? Tuloy-tuloy na yan eh. Ring, wedding, moving out, kids, no? It's all just a constant flow. So I was preparing for that. And I got to quantify it by asking my friends, how much is a ring ba? 1 carat. Yung medyo nice naman. Di naman yung sobrang mahal, pero di naman yung sobrang kawawa, na sobrang liit. No? So just getting a sense of those numbers, putting it all together, that's what Money Day 2 is about. And for the retirement one, I'm going to share with you one of the most popular and I think easiest to understand strategies of figuring out how much is enough for retirement. They call this the 4% rule. This is a study done by William Bengen from the States. he wanted to figure out how much can my retiree clients withdraw. What he found, and this is a study that he did, retirees can safely withdraw 4% of their retirement fund and adjust it for inflation over 30 years without running out of money. So for you guys, I'm not sure if there are a lot of people here who are near retirement or still far from retirement. We flip that to figure out how much is needed for retirement. And all you have to do is look at what's your best life budget. Like when you're closing your eyes, dream life, what's the budget for that life? Multiply it by 12 months, divided by that 4%, then you're gonna get your retirement fund figure. So, as an example, let's say I close my eyes, that's about 100K, that kind of dream life. Multiply by 12 months, I have 1.2 million pesos per year, divided by 4%, then I get the number 30 million. Whew, that's the big one, right? And it depends on you. If you have a hard time remembering this, let's simplify it even further. They call this the rule of 300. It's the same math. They just mathed it to be a bit easier. 100K times 300, 30 million. That's your number. If you want a 200K lifestyle, essentially it's times 2, 60 million. Now, you'd be surprised, some people want a 1 million a month lifestyle times 300, 300 million. Right? That's how you can quantify. So compute your target number today. You guys have your phones, calculators. Just type it down, write it on your notebook. How much? What's the best life? 100K, 30 million. 200K, 60 million. 1 million, 300 million. Right? And that's the second step. That's the second money date. That's how you understand what your goals are, and that's how you quantify those goals. Now let's get to the third part. Let's go to the life plan. Let's put together everything we discussed earlier today into one big overarching framework. And to have that what we call your roadmap to success. So you want to ask yourself a couple of questions, because you always do this. This is your third money date, life planning. Ask yourself, how will your income increase over time? Chances are you're not yet there at the 30 million or 300 million. How will your income increase? Are you going to take more studies? Are you going to increase essentially your breadth of experience, go deeper into it so you can then earn more income? How will your savings rate, and we did the math on the 4% rule, if you want to retire at 50 or in your 50s, from 20% you have to bring it up to 50% over time. What's your strategy for doing that? How will your income increase, and make sure your expenses don't increase as fast, slightly slower lang. And lastly, and that's one of the big things you talked about the whole day, how will you make your money work for you? And I think in terms of practical steps you can do, first off, figure out your approach. Because there's two approaches to doing this. Are you going to do it yourself, meaning do all of these steps I just talked about today, date yourself or with your spouse, do your own planning and your own investment management, or I just coined this term myself, do it together. Are you going to hire a professional to help you go through this process with you? And let me share with you the pros and cons of each and a way to better gauge what makes sense for you. For a do-it-yourselfer, you're going to save a lot on fees, for sure. Cut out all the fees, save more, invest more, get there faster. You have more control. If you know that your outlook is, okay, I think this is how it's going to work, bonds are going to be great, I'll buy bonds now. At least no one's going to tell you otherwise. And third, there's no hard selling. It's just you and yourself. You won't get annoyed by someone pushing a specific product that you have to buy this that you think doesn't make sense. Now on the flip side, what are the benefits of a do-it-together approach? You get tailor-fit advice to your specific situation, because chances are the do-it-yourself material is more for, like this one. This is a do-it-yourself platform. I have to talk to everyone in one way. I cannot tailor-fit my advice to your specific situation. And you're able to save a lot on time and energy because someone's doing the nitty-gritty work, researching all these things for you. And last is what you call proactive planning. You have a coach, like a sports team, high-performance coach, or a mentor to help you accelerate, to keep you in check, to keep you accountable to someone. So the cons are essentially the flips of both sides. So the way to figure out which one is for me, ask yourself this question. Do you have the three things? Time, interest, and skill. If you have all three, or if you don't have the skill, do you have the time and energy to develop those skills? Then it makes sense to do it yourself. Otherwise, might be better to do it together, but obviously you have to find the right professional with your interests at heart. So you have your notebook, that's the next thing. You have your money date, diba? Now, right there, am I gonna do it myself, do it yourself, or do it together? Write it down so you know, so you have something actionable that you can work on right after this. But whatever you take, whichever path, do it yourself or do it together, you'll still probably have to go through this question, okay, what's the best investment for me? How does this thing work? Or what's the best overall? And we talked about a lot of these earlier today. And there are so many. Online banks, traditional savings account, time deposits, stocks, bonds, real estate, crypto NFTs, businesses, the list continues. And I won't belabor these points because it was already mentioned earlier. The way to put some order to the chaos is to put it on a risk scale, risk return scale. Your savings account, time deposit, and let's say the money market funds earlier mentioned would be here. Lower return, lower risk. You know? Somewhere in the middle, you have your bonds, like your bond funds, a bit more return, but there's a bit more risk. And then your highest risk would be your stocks, your REITs, your global equities, all of that. And I'll just give you like a very quick overview of what that risk and return actually looks like based on the past 20 years performance. If you had 100,000 pesos over a 20-year period, you see the gray line on the bottom, that's your money market fund. It gave you about roughly 3% return over the past 20 years or almost 2x your money in that time. Bonds, you could see there are times where it goes down. It's not a straight line packet. Bumaba rin yan. No? That one was able to give roughly around close to 5% average annual return per year based on the past 20 years. And your stocks, obviously you can see the roller coaster of a ride that it takes you. This is the stock index, your top 30. You're able to get 6x your money or roughly almost 10% average annual return. So then you can now figure out, okay, these are the types of returns that I can get from different investments. So what's the best investment? Stocks give the highest long-term returns, but are they the best investment for everything? Not necessarily. No. It's the best highest returns for the long term, but they're not necessarily the best investment for all of your goals. Why is that? I'm gonna go very personal, just so it's easily relatable. So I got an earthquake in 2019, launched the business in 2020. 2021, at this point, most of my money was in the stock market, and then I needed to buy the wedding ring. No? So, could I tell my fiancé, now wife, na, teka lang the market is down, so I'm gonna have to make this ring like that much smaller. Okay lang, okay lang. Diba? Siyempre hindi, diba? Ba't di mo ito inayos? No? So, that's the reason why, buti na lang, I uncovered the whole risk profile, no, based on my goals. That goal was not aggressive. I knew that it was gonna come, so I had a more moderate type investment. To be very specific, in terms of the goal, no, was it a short-term goal? Was it a medium-term goal? Was it a long-term goal? When I started planning for that, it was here in the medium-term portion. And as you could see, I didn't buy stocks with it. Buti na lang, I had specifically a bond fund. That's what I used. So at least I didn't have to settle for a smaller ring that she'd be pissed off and will never let me hear the end of it. And lucky for me that I was able to diversify with a bond fund at this time because I was approaching it from what we call a goals-based perspective. So it's not the investment first and then something fits a goal. It's the goal first. It's your life first, figuring out which of these products fits that. And because I was able to really use that kind of framework, and I hope you guys can use that same framework, I was able to then buy the ring. 1 carat round cut. Thank you, thank you. because it was in the bond market. If it was in the stock market, medyo ibang usapan na to, no? So that's how important it is to have a goals-based approach, to have a life plan, which really looks at the goals first and all these investment products second. Finding out, okay, for retirement, siguro, I want the REITs, I want the stocks. Kapag medium-term goal, then I want the bond funds instead. Right? So this is how it looks. Yeah, so that's when we surprised her. She didn't know. She had no clue. Like her nails weren't even done at that day. And this is in 2021. And because I kept the same method, same framework, doing diagnostic, looking at my goals, doing a life plan, what was started out as a tradition of my father kind of got passed on to us. I also had to save up, and I don't normally say this to a lot of people, but well, now I am. No? I'm happy to say I was also able to pay for my own wedding the next day. So this is in Tagaytay Air. So yeah, we got to invite all of our friends. So swerte lang kami na hindi kami na COVID. No? That's the whole point of money. Right? That's why we do the investing. That's why we're spending these Saturdays here in SMX. No? It's so that we can have the life that we want. It's so that money is simply the tool to give us the life, or to allow us to have the life that we're totally going to enjoy. And I know I mentioned a third goal, retirement. I'm not there yet, I have to admit. I'm still hustling, though. I'm not there yet. But what I do know is I'm on the right track. I'm taking the right steps. I'm doing this process over and over again, just so that I know I'm doing the optimal way of getting to there as fast as possible, as sustainably as possible, without killing myself in the process. So what's this process? Design your life. Diagnostic. Then you look at your goals, being very clear on what's really important to you, and then having that life plan. Do it yourself, do it together. Once you've decided on it, taking that goals-based approach to figure out what's the right product, what's the right strategy for each of my goals. And let me end my talk here with this. Now, I've seen this rephrased multiple times, this line, but I think this is the best one I've found so far. When money is not a servant, it is a master. On your way home today, when you're driving by, you're going to commute, whatever, ask yourself, between you and money, who's the master? If you're still asking that question, then you're not the master. Right? So when you've decided that, okay, I want to be the master of my money, I want to make money my servant, then today I hope you're able to remember these three things. How do I become a master of my money? Design your life. Thank you very much.
Thank you, Enrique.
I'm gonna sit here now. Okay.
Yes, oo. Nahirapan actually ako magsalita kasi na-overwhelm ako. I was
Stress ba?
No, well, it's just a lot, but it's a very great way to wrap today. Taking all those principles, all the concepts that we've been given, all the strategies, being presented also the opportunities, and actually you capping it off with matching it to what happens actually when we go home, when we leave. Pag wala na tayo dito sa bubble na to, kasi dito, parang, sige, game na game tayo.
Oh, game na game eh.
Pero paglabas, parking, or baka nga, even, ayun, it's a mall, You go out and there are stores, right? Again,
Yeah.
you ask, or baka you're presented with a situation, who is the master, who is the servant, right? So, thank you so much. Again, I'd like to cue everyone to key in their questions on Slido. Please feel free to also raise your hands as early as now or stand up for questions.
meron na.
Okay,
Meron na.
great. Yes, sir, go ahead.
Yeah, para live, para we can hear your voices then. Ayaw ba? Okay.
Looks like it's off.
Hello.
Yeah.
Yes.
So good afternoon po. Siguro I say it na lang. Medyo controversial din kasi siya. So why is V or L classified as bad recently?
Okay, paano ba to? A product is bad when it's not used for its intended purpose. No. VULs, as I see it, it is both. No? You get an insurance component, and then you get an investment component. There's a pooled fund there. The insurance portion is an expense. No? VULs are helpful if you don't have the discipline to even invest directly. So at least, if you really need the insurance, at least you get an insurance and then you get an investment. Personally, I don't buy the mix. No? I actually want to keep it separate so I can better determine, okay, do I need insurance or not? Then I'll buy. Usually it's cheaper to do it split, yung term. That's cheaper. But if you're someone na parang, honestly, itong friend ko, hindi yan mag-i-invest by himself. No? Pero kailangan niya rin ng insurance, then maybe it makes sense for them to get that. No? But if you're buying VUL primarily just for the investment component only, you don't need insurance, then why are you buying the other one? Because you're paying for it. So for me, wag na lang, di ba? But I have to admit, there are very specific cases, the single pay VUL, yung one-time pay, where you can use it from an estate planning perspective, like from a tax perspective. But it's different. No? So it's, I don't think it's a bad product. I think there's a right market where they're better served by that. Diba?
Very interesting question to start with. You have more? Sure.
Sige, go lang. Para may conversation na tayo. What's your name pala, by the way?
Lem.
Lem, okay. Go for it,
So
Lem.
actually, I already got an advice from a financial advisor. So, medyo follow-up questions actually to.
Sure.
Pero sa inyo na lang. So, is it better to resolve debt first before investing?
Okay. What I would look at no is this. Normally, when we deal with clients, we do both sabay. You know? Probably a bigger chunk of it should go to paying off your debt, especially if it's high interest. Kung wala namang interest, hindi parang okay lang medyo mag-delay na konti, no? But the way I treat it kasi is you want to save up, and actually for me nga, maybe not invest, maybe like a money market fund lang, if you're at that position. Kasi the money market fund will be helpful so that you don't have to incur more debt if an emergency happens, right? That's when I do parang an invest portion and a debt payment portion to build up an emergency fund. So yeah, so I hope that helps answer the question.
Any more questions? Nakaabang kami.
Kala tatanong siya, hindi pala.
Naglalakad. Any more hands raised or maybe questions on Slido? Okay, let's queue in Slido questions. Hi Enrique, how should I allocate my savings throughout my different life stages from the ages of 30 to 60?
That's my whole job, you know. Okay, there are different ways to go about it. I don't know the person's specific situation, so I can't be super tailor fit. But the general guidelines, no, not exactly applicable to everyone, that they use is looking at your asset allocation, meaning your total wealth, no, 100%. What percent goes to stocks? What percent goes to bonds and yung mga other fixed income like money market? A simple way to go about it is 100 minus your age. Let's say you're 30 years old, 100 minus 30, 70% can be maybe in the stock market. Now, this is a general guideline. I'm putting all the disclaimers that I can. Hindi ko alam eh. Baka naman kasi...
Not knowing everything else that's needed.
That makes sense. The 70% stocks makes sense if you're not like straddled with so much debt and you're not, and you can actually afford to invest that much money. But that's a simple guideline. 100 minus your age as a simple guideline to figure out, okay, as you get older, you may need to lessen the stocks portion and move more to whether it's dividend paying, income paying, or bond-like investments, because you need that for your income na. Compared to when you're younger, you're probably earning money and still adding to the fund instead of pulling out money from the fund.
Another question on Zoom. I'm about to retire. Should I keep my money in stocks Or would you have any suggestions as to what would be a fitting investment? Sulitin natin si Enrique.
Okay. So kapag retire, about to retire, even for the ones who are retired, we believe that there should still be a portion in the stock market. The reason for that is you don't know how long you have to go. 80s, 90s, who knows? Baka naman you're retiring, you're about 50, 60 pa lang. Baka by the time you're 80s, they prolong your life to 100. We don't know, right? So there always has to be a portion in stocks. No? You heard it from the ones earlier. Stocks are cheap, so might be a bad time, timing-wise, to sell today. But definitely, whether you're about to retire, already in retirement, or far from retirement, always have that proper mix, that proper asset allocation. You know, the 100 minus your age is a nice, like, easy, simple, you know, guideline to follow.
But basically, you never really let go of stocks.
Yeah, yeah. For me, I wanna hold things forever. No, I mean, you know, like if you think that this business is gonna keep making money, or you think stock index, the top 30, they're gonna keep making money, you wanna just ride that all the way.
If you believe in a particular growth story. Another question on Zoom. And please, again, just raise your hands. I'm watching the audience still. All right. Would you have any advice on how to develop good money habits, especially ones that you apply or use on a daily basis?
Okay. Read the book, Atomic Habits. It's a good book about understanding the habits. But one of the ways, I think, to help develop a good money habit, I think I can think of two things from the book. One is attaching it to an already existing habit. So for example, for me, in terms of money in particular, I log my expenses as it happens. So the moment I pay or I transfer the funds, I already log. I linked that habit already to log it before I do anything else. Literally at the cashier, I give it and I'm still standing there until I've done and I move on. Another way to build good money habits is to have an accountability partner. So a friend of yours, you guys can, either, okay, whoever gets to save more or whatever, I know friends who do this, whoever gets to save more, wins, and the other one has to libre the other one. Parang ganon. So to have someone accountable to you might help build that good money habit, and then linking it to your existing habits might make it easier for you. So for example, if, I don't know, every month you treat yourself to like a movie out, ganyan, or every quarter, you're by yourself in a movie, sama mo na rin yung money date mo dun. So try to include a specific habit that already exists and then link the new habit that you want to that. Chances are it's going to be a bit easier to do.
Para it's not a new habit altogether.
Yeah, exactly.
And you mentioned, was it logging your expenses? Is it part of D? Just always maintaining your
So
log of your expenses?
Yeah, so I always have a log. And then in terms of the money date, the balance sheet, ganyan, every quarter. Ganon. Yun yung, I guess those are some of the habits I try to keep doing and tell my clients to do also.
Great. Okay. Hello, Enrique. I'm currently putting up a business and shelling out a good chunk of my savings for it. What would be your suggestion regarding my allocation of the rest of my savings? Would it be wise to invest it in different assets?
Whether it's a business or you're doing something else, it's always good to diversify, just to get that out of the door. If you're going to be putting up a business, the way I'd look at it is the percentage of your total wealth that's going in the business, that also forms part of that higher risk allocation. So kanyari, your asset allocation is 50% stocks, 50% bonds. Yung pang business mo, the cash you're going to put there forms part of that 50% stocks because it's high risk. So if, for example, okay, this business is going to take a good chunk of my wealth, after I invest in this business, that and my stocks is now, let's say, 70%, 80% of my total wealth now, or my net asset value. Then that means everything else should probably be in more conservative, fixed income, like bond funds, money market funds, time deposits, savings accounts. So ganun.
In that case then, would you say that everything you shell out, you kind of look at it from a portfolio allocation perspective?
Yes. So
go ahead.
Exactly, it's the whole thing. Whether it's in a business investment, put it in the total picture. Whether it's, let's say, real estate, you can also put it in the total picture. Because there are some people na parang they put all their money in real estate, 80, 90% of their wealth in real estate. Now, it's okay if you understand what you're doing, but chances are, if you have 90% in real estate, the 10% left, that means you don't have a lot of liquid assets, no? So that might be too much na, no? But syempre, it'll always depend on your situation.
Great. From Aretha D. Hi, Enrique. As a fresh grad and newbie employee, I know I have time on my side. Would it be best to focus on building an EF first, an emergency fund first, before taking the chance on investments, or could I try starting on investments as early as now? Thank you.
Yeah, for me, both. Do both. And in terms of the split, no, let's say I can save fresh grad, okay, 10K a month. No, I can set aside. So the question is emergency fund or the retirement. Depending on your own money date and figure out which one's more important to you, what's a priority. If for you, actually same, I want an emergency fund as much as I want to prioritize a retirement fund. Edi split mo, 5K each. 5K goes to the retirement fund, 5K goes to the emergency fund. I don't think you necessarily have to do one first. No? Then wait till super long and you might not be able to do it anymore. No? Yung pang long term.
On that though, can you do away entirely without an emergency fund?
Definitely should have an emergency fund because
it's the bare minimum.
Yeah, kasi it's I guess it's a primary thing you should be building up if you're not there yet. And it's hard because you'll never know when some weird COVID-like thing happens again. I mean, if anyone told you they knew or they predicted COVID would happen, would be a liar, diba? So in the same way we all experience COVID, totally unexpected. We should always have part of our overall portfolio, overall asset allocation, something that's ready for another COVID or something like that.
Okay, great to keep in mind. Thank you. From Ann Garcia. I lost my job and that just blew my budget and plans out of the water. How does one even begin to plan when you lost your income stream and are just watching your finances bleed out? I do have money in the stock market and I sense I'm more anxious with it because it's all I have.
Okay, at least from the question, it seems like majority of her wealth is already in the stock market. That's when it makes sense to have that emergency fund first, no? But since we're already here, wala na, how do you begin to plan? Well, it's just a numbers game, no? When you're looking or you're applying for a job. It's really just being able to apply to as many places as possible, but as strategically as possible. I think I'm gonna go medyo outside of finance, more into like career planning na. The way I would strategize on it is to remember that the best jobs are not online, posted, or on LinkedIn. They're not. The best jobs, or the majority of the jobs, are only known by the people in the industry. So you see people, let's say from COL here, they know the jobs that are available in this industry. They don't post everything because HR takes a while to do all of these things. No? So your best strategy is actually to talk and meet, not to push them for a job offer up, but to do what is called an informational interview. You ask them, can I know what's a day in the life of, let's say for you, Trishka, how does your day look like? No, does it make sense? Like what kind of education achievements? What characteristics? The more curious you are, the better questions that you ask. And if that person feels, wow, this person really wants to be in this industry, then your best scenario is they'll say, you know what, there's actually an opening sa amin, or I know my friends in this other firm, similar thing, they could use someone as curious as you to fill a slot there. So you do a ton of that. I tell my clients at least 10. No? And my wife did that. She did that when she was looking for a new job. And now she works at Food Panda because she did that exact process. Talking to a bunch of people, information interviews. Her boss now is literally one of those interviewees.
Taking it back though, into how she would go about managing
At the money
her
side, sorry, yeah, I forgot about
no
that.
problem.
Yeah.
So
Yeah, that's
her
hard.
background,
Yeah,
where she's at now, how would you advise her to handle it?
Yeah, so literally scrape for cash wherever you can. Parang sana last bit na yung pagbenta ng stocks kasi ang hirap sayang eh. If it's selling your stock or taking out a loan with high interest, sell the stock, no, take the loss. But if you can, I would suggest look at stuff to sell in your house now, just for quick cash to tide you over. I would suggest that instead of selling your stocks, which chances are probably down now, sayang. And all the new money coming in should be allocated outside of stocks for now kasi wala ka pang emergency fund.
Very helpful, thank you. What's your portfolio mix in percentages?
Kerwin, okay.
Kerwin T.
By the way, after this one, kung may mga tanong dito, just go for it. Okay,
Yes.
very personal. I used to be 90% in the stock market growing up. No? Kasi no needs eh. Wala naman eh. When I moved out of the house, that's when I started to build. I kind of slowly brought it down to like 85. When I was thinking about getting married, brought it down to 80. Now I'm like closer to 70% kasi we're also planning maybe to have a family of our own, so I should probably have some cash ready for those kinds of things. So I'm right now at around 70% in the stock market, local and global. 30% are in fixed income. No? But that's me, no? Kasi parang plinano ko na eh, yung ano yung possible expenses ko, cash na siya sa 30% eh. Pero kung hindi, babaan mo yung percentage mo. So goals first, and that's gonna be the one that
That
dictates how that asset allocation will look like.
Yes, we have a question from the
Yon,
audience.
go for it.
Hi. So for college students that are going to graduate in approximately 2 years,
Okay.
how much of their portfolio would you recommend that they allocate to stocks or bonds? And with that,
College.
how should their portfolio compositions evolve after they graduate?
Okay, so college student, you haven't, let's assume you haven't graduated yet. Here's my process. I don't know if you're a good saver, or do you even know the idea of saving and how it's gonna make your money grow. I would start off with literally just savings account, kahit yung mga online na savings account. And if you have the habit of putting aside money, saving it, and you understand that, hey, this thing can grow, no? Then you can start venturing into investments. Kasi if you don't know the concept of sitting and waiting on it, going into investments from the get-go, chances are you will get burned and you might completely just don't do it. No? But let's say you get it. Let's say you've been saving, you understand how this works. Then for us, it was 90% in the stock market na, while we were students. And I had to actually bring it down a bit as more like, adult expenses, like a ring and these kinds of things came about. So as a student, you can do 90-10. It's okay. Kasi I think, what are you going to spend on? For me, it was my 10% was just to buy an electric guitar because that was so cool at that time. Yun lang. No? Everything else, I just invested it to the stock market long term. So I hope that answers your question. Tama ba? Okay ba? Yun, nice. Cool. Ayun, meron pa.
Yes,
Live. Go
see
for it.
More hands raised.
Hello po, good afternoon. Question lang po. Client na po ako since 2012.
This is in COL. Okay.
Apo.
Okay.
And then yung mga dividends po, hindi ko na-check. So wala rin akong pake kasi long term nga po. So saan po siya pumapasok? Yung mga dividends, kasi iba-iba po yung stocks na meron ako. So hindi ko alam talaga kung saan siya pumapasok. Thank you.
Dividends, but how are you notified po, ma'am? You get email advice?
Po, opo,
Yeah, it should be in your
nag-email.
account.
Sa cash balance?
Yes.
So,
Yes.
pwede kong ibili ulit yun ng iba?
Yes.
Yes.
Okay, sige po.
Please do.
invest mo na yan.
As in ngayon na, gawin mo na. Mag-login ka na ngayon. Gawin mo na. Bili mo.
Bigyan
Sayang.
ka ng Wi-Fi access.
0% interest yun ngayon. Sayang. Invest mo na yan.
If you need help with your account, since mukhang inactive, matagal mo nang di na-open, please feel free to visit our booth outside. Yes, more questions. Go ahead.
Hello po. My name is Christian. OFW po ako. Question ko po yung sa mga OFW suggestion where to invest. Kasi prone po kami sa yung kailangan naman ng emergency funds, parang ganun lagi. Thank you.
Okay, whether OFW or you're based here, it's the same things. No? You still have to be invested in a diversified way. I think the difference lang for an OFW is you may want your emergency fund in your own country. No? Kasi if you have the emergency fund in the Philippines and then you're, let's say, in Dubai or whatever, and then the emergency happens, baka mahirap kunin yung pera Di ba? So I would split that based on where will the goal be spent. Meaning, if I'm planning for a trip, let's say saan ka ba based, if you don't mind me asking? Or you're not an OFW ba now?
Bali seafarer po, cruise line.
Okay. All right, so there's no like real base. It's just like at sea. Okay. Then technically speaking, it's similar to someone who's based here. No. For example, if you have an emergency fund, it has to be in an account, no, that you can easily access even while you're at sea. Makes sense? But if it's going to be, let's say, retirement, and you plan to retire here anyway, then you can invest, let's say, in the stock market here.
Kasi nga po wala po kaming skills or time para mag-isip pa kung saan ilalagay. Any po yung direct advice po, yung kailangan kasi namin direct to the point kung saan kami talaga mag-i-invest. Sa REIT ba, sa mutual fund, ganun.
I guess we're talking about the
Yung
allocation.
talagang specific to your situation, that's what you're asking for. No? Then you have to hire an advisor, man. I mean, like I say, di ba? If I give you an answer right now, I'm putting myself at risk of misdiagnosing you, di ba? Like, the way these financial professionals work is we're like doctors. No? Everyone has a specialization. No? Everyone doesn't want to just tell you to take pills without doing the tests, right? So I do want to help you out, though, but unless you can go through those tests, you're asking me essentially to do heart surgery on the spot. I can't do that, diba? So what I was able to give earlier is a process you can take to go through it yourself, but if you really want someone to do heart surgery on you, then you should hire a heart surgeon, diba? Who will do the operation for you.
Admittedly, sir, no, a lot of steps would need to have to come from you. Information also, kailangan manggaling sa inyo. But for specifics, I mean, I don't want to go fast forward kasi nga ang daming steps as Enrique outlined. We want you to be informed about the risks of whatever it is also you're taking on, in addition to just yung potential, kung paano mo siya mag-grow. But there are different classes, as discussed earlier. And also, sir, for specific picks, you can scan the QR code on the paper, the piece of paper, the pad that you have sa desk. It should reflect the different picks, REITs, funds, stocks that we talked about today. Pero yun nga po, di ba, we discussed kanina how these should be taken, how these recommendations should be taken.
Yeah, I guess just to add, though, actually kanina they had it, like si Zane
Siya dito.
Zane had all those fun picks. I agree, they're pretty good. So you have to figure out what's your goal and then choose a specific fund from that list. I think that if you don't have time to manage it yourself, it makes sense to buy funds than to do direct stock picking. And then if you look at those, there are already very specific ones that you can invest in, so you can try that out.
Sige. Ma'am, sige, you already have a mic. After you, let's take a question on Slido. But go ahead, ma'am. Yes.
Yes. Yung ano po, yung gusto ko lang sanang itanong kung may dalawa akong products, yung isa is kumikita na, then yung isa naman ay bumagsak, ano po ang the best nung dapat gawin?
Okay.
Kung gusto ko nang ilabas ba yun or stay lang doon?
Okay. Yung dalawang investment na to, are they both like stocks ba? Tama ba? They're both stocks. Or not really. Iba-ibang product? Okay, so here's the thing, no? If it went up or down recently, no, versus your cost, that should not be your basis of whether to buy or sell. What do I mean by this? Kanina you heard earlier, they were talking about, okay, it makes sense to, let's say, buy bonds at this point. No? The reason why it makes sense to buy bonds at this point, because the previous year, sobrang laglag. No? Then, if I just base it off what you mentioned, yung isa laglag, yung isa akyat, no? Then, kung yung bumagsak is yung bonds, for me nga, if ever, you should be adding pa to that, no? Kahit na bumagsak siya, right? Similarly, yung umakyat, no? What if it's, I don't know, let's say you have a strong conviction on a global tech trend, you think it's gonna keep going, umakyat na siya. If you think it's still going to go higher, no? Then you keep it pa. But if you think, okay, that's it, that's the max, that's like the peak already, everyone's talking about it, the priest is talking about it, the nurse, the DJs are talking about it, it's time for me to exit. Whether it's up or down, you exit na. No? Makes sense? Makes sense pa?
Okay, thank you. All right, sige, let's take one Slido question. I'm in my mid-50s. If no. Is she? In my mid-50s currently. If I'm going to invest now, how can I ensure that all my investments are received or inherited by my family in case something happens to me? Based on experience, my dad passed away 10 years ago, and up to now, we still haven't been able to address concerns regarding his investments or property.
Ooh, wow, okay. You need to hire a professional to help with estate planning. The problem here isn't is it in this account, is it in that property? That's not the reason why you're not able to get your money after 10 years. The reason for that is you didn't have, or your father may not have had a clear estate plan with a written will that says this property goes to this kid, this property goes to this kid. If it's bank accounts lang kasi, there's already a law in terms of how it's going to be split. They call it legitim. There's a lot of details there, but essentially X% goes to this kid, to the spouse, etc., etc. So for you to ensure that that doesn't happen again to your kids, what you're experiencing now, then you have to do the whole process of, they call it estate planning. Being able to prepare the specific documents, figuring out, okay, which asset goes to which kid. You know? And if it's in an investment account, make sure that they have those contact details of those professionals. Kanyari, you have an investment with, let's say, with COL. No? Who should your kids talk to from COL so they can inform COL na, hey, my dad passed away, we know he has money there. But you as the parent, you actually have to have all of those accounts in the list. So just borrow from what my dad does. My parents growing up, they had this envelope. They call it like the in case of emergency break glass envelope. So we know that since they both flew out to abroad or whatever. If anything happens to them, we will open that envelope, and in that envelope is everything, money-wise, all the account numbers, contact details. Lahat yan. And we even know that there's a specific tita who they've talked to that since when we were kids, no, na siya yung essentially magiging guardian namin and is also aware that such an envelope exists. No? So more than which account do I open at, which property do I buy, it's more of having that overall estate plan. And yun nga, maybe you can do something like an envelope where everything's there and your kids know that that exists.
Thank you. Specific to COL, ma'am or sir, there's an option to add in another account name to your account as a joint account or have it as an in-trust for account so that your and your family members' name or names are part in that account. All right. I think that's it. We've ended the day. Thank you so much, Enrique. I'll let you go now.
Thank you everyone.